Ever wondered how the rich manage to pay less taxes? Well, you're not alone. It's a topic that has sparked intrigue and curiosity the world over. The wealthy seem to have a knack for preserving their wealth, and one of their secret weapons is tax optimization. It's not about evasion or dodging responsibilities, but rather about smart and legal strategies to reduce their tax liabilities. The rich, with their team of financial advisors and tax experts, have mastered the art of navigating through the complex labyrinth of tax laws, finding every possible deduction, exemption, and credit. They play the game of taxes like a well-orchestrated symphony, where every note, every instrument contributes to the overall melody. And the melody, in this case, is the preservation and growth of their wealth. But here's the good news: these strategies aren't exclusive to the rich. In this video, we'll explore these strategies and how you too can take advantage of them. So what exactly is tax optimization? Well, let's break it down. Tax optimization is a perfectly legal strategy used to arrange one's financial affairs to minimize tax liability within the bounds of the law. It's about working smarter, not harder, with your money. Imagine you're a gardener. Just like how you would use the right tools and techniques to get the most out of your garden, tax optimization is about using the right financial tools and techniques to get the most out of your income and investments. It's about understanding that not all income is taxed equally. Some types of income, like long-term capital gains and qualified dividends, are taxed at a lower rate than ordinary income. Others, like certain types of business income, may be eligible for special deductions. By strategically earning and investing your money in ways that take advantage of these differences, you can reduce your overall tax liability. But tax optimization isn't just about reducing the amount of tax you owe now, it's also about timing when you pay your taxes. For instance, with retirement accounts like traditional IRAs and 401ks, you can defer paying taxes on the money you contribute until you withdraw it in retirement, when you might be in a lower tax bracket. And why is tax optimization so essential for wealth preservation? Well, the less money you lose to taxes, the more money you have to save and invest. Over time, this can make a significant difference in your wealth. Let's say you're able to save an extra $2,000 a year by optimizing your taxes. If you invest that money and earn an average annual return of 7% in 30 years, you'll have nearly $227,000 more than if you hadn't optimized your taxes. So you see, tax optimization isn't some mysterious concept known only to the wealthy. It's a practical strategy that anyone can use to keep more of their hard-earned money. Understanding tax optimization is the first step to reducing your tax bill. Now that we understand tax optimization, let's dive into the strategies used by the wealthy. So, what are these strategies? How do the rich manage to pay less in taxes? Let's delve into three common tax strategies: income shifting, tax deferral, and the use of tax havens. Firstly, income shifting. This is essentially about moving money around. It's a bit like a game of hide and seek. The idea is to shift income from a high tax rate environment to a low tax rate environment. For instance, a company might set up a subsidiary in a country with lower corporate tax rates and shift its profits there. By doing so, the company reduces its overall tax bill. Next, we have tax deferral. This strategy is all about time. Essentially, it's the financial equivalent of delayed gratification. By taking advantage of certain investment vehicles, such as retirement accounts, the wealthy can delay paying taxes on their income. The money they would have paid in taxes can then continue to grow, tax-free, until they're ready to withdraw it. Smart, isn't it? Lastly, let's talk about tax havens. These are countries or jurisdictions with very low tax rates or even no taxes at all. The wealthy often place their assets in these tax havens to reduce their tax liability. It's not unlike hiding your most valuable possessions in a secret, secure location to keep them safe. Now, you might be thinking, but these strategies sound complicated, and surely they're only available to the rich? Well, not quite. While it's true that the wealthy often have more resources at their disposal to implement these strategies, that doesn't mean they're exclusive to the rich. In fact, many of these strategies can be used by anyone, regardless of their income level. It's all about understanding how the tax system works and finding ways to make it work for you. These strategies offer significant tax advantages, but they're not exclusive to the rich. You might be thinking, how can I implement these strategies? Well, let's dive right in and explore some practical ways to navigate the tax labyrinth. Firstly, consider income shifting. This isn't about hiding your earnings under a mattress, but rather about legally repositioning your income. You could, for instance, shift your income to a family member in a lower tax bracket. This could be as simple as employing your spouse or child in your business, thus reducing your overall tax liability. Next, let's talk about deferring taxes. This is the financial equivalent of delaying gratification. Instead of paying your taxes now, defer them to a later date, ideally when you anticipate being in a lower tax bracket. Retirement plans are a classic example of this strategy. By contributing to a 401k or an IRA, you're essentially deferring your tax payment until you retire, when you'll likely be in a lower tax bracket. Lastly, remember that tax avoidance is legal while tax evasion is not. There are plenty of legitimate ways to avoid paying more tax than necessary. For instance, consider investing in tax-advantaged accounts, like health savings accounts or education savings accounts. These accounts allow your money to grow tax-free, and you won't pay taxes when you withdraw the funds for qualifying expenses. It's also important to remember that owning a home can provide you with several tax deductions, such as the mortgage interest deduction. And if you're self-employed, don't forget about the plethora of deductions available to you, from home office expenses to business-related travel costs. Moreover, consider seeking advice from a tax professional. They can provide you with personalized strategies based on your specific financial situation. This investment could potentially save you thousands of dollars in the long run. In conclusion, tax planning is not just for the wealthy. With a bit of knowledge, a dash of strategy, and a sprinkle of patience, you can start implementing these tactics into your financial routine. Remember, every dollar saved in taxes is another dollar in your pocket. With careful planning, you can start reducing your tax bill today. Knowledge is power, especially when it comes to taxes. Now, isn't that an intriguing thought? You see, the intricacies of tax laws are not designed to be a maze of confusion, but a roadmap to financial wisdom. They are the keys that unlock the treasure chest of intelligent tax planning. At the heart of tax optimization is a simple principle. The better you understand tax laws, the better equipped you are to leverage them. This doesn't mean you need to be a tax attorney or an accountant. It simply means staying informed, staying updated, and using that knowledge to your advantage. Tax laws are dynamic, they change, they evolve. Governments around the world tweak and adjust them in response to economic conditions, public policy objectives, and political climates. These changes can directly impact your financial well-being. For instance, a new tax law might introduce incentives for certain types of investments, or it might modify tax brackets or change the rules around deductions and credits. By staying abreast of these changes, you can adapt your financial strategy. You can plan your investments, adjust your income, and even time your transactions to optimize your tax outcomes. For example, if a new law offers tax breaks for renewable energy investments, you might consider investing in solar panels or electric vehicles. If another law changes the tax brackets, you might adjust your income strategy to fall within a lower tax bracket. Now, you might be wondering, how do I keep up with all these changes? Well, there are many resources available. Government websites often provide updates on tax laws. Financial news outlets, tax blogs, and newsletters are also useful. If you prefer a more hands-off approach, consider hiring a tax advisor or a financial planner. They can provide expert guidance and help you navigate the choppy waters of tax planning. Remember, every dollar saved on taxes is a dollar earned. Every dollar earned is a dollar that can be invested, saved, or spent on things that matter to you. By understanding tax laws, you can take control of your financial future. In the end, it's all about creating a fairer tax system. So what does that entail? Well, it's about bringing change, reforming the current system to ensure everyone pays their fair share. It's about making sure that the burden of taxes doesn't rest heavily on the shoulders of those less able to bear it. Yes, the rich have their ways of minimizing their tax bills, but wouldn't it be better if we all had a level playing field? We need to push for reforms that ensure this fairness. However, until that change occurs, it's crucial to understand and leverage the existing strategies that can help you lower your tax bill. Take a leaf from the Book of the Wealthy and use the system to your advantage. But remember, the ultimate goal should always be to strive for a system that is fair and equitable for everyone. Remember, reducing your tax bill isn't just for the rich. With knowledge and planning, you can do it too.